Good afternoon, everyone. Thank you for joining us for our weekly webinar, Meet the Sponsors. Today, I'm excited about introducing the senior shared living folks out of Chicago, Illinois, and introducing their Spalding House investment. We're excited about this particular asset class because once you look at the actual data, it supports 44,000 baby boomers turning 85 years old every day until 2030, with the majority of them requiring at least 3 years of assistance in their daily living. With that being said, we introduced the concept of retiring in your neighborhood. Let me tell you why I love this deal. The sponsors have over 5 decades of combined institutional level experience in the assisted living and specialized care fields. High demand, low inventory. 12% of Chicago's population is over 65. It's expected that 1/6 of the population will be over 65 by 2030. There's only 9 assisted living facilities in the entire city of Chicago. Great location. I'm from Chicago, born and raised, and Albany Park is a great little cozy middle-class safe neighborhood. Recent renovations to the property conditions. The home was completely rebuilt in 2009 and recently renovated last year in 2016 with durable high-end finishes, bringing the home to an effective age of basically brand new. Now let me tell you a little bit about RealtyeVest and how we're rolling this opportunity out on our real estate website, RealtyeVest.com. We like online crowdsourcing opportunities because these opportunities that we bring to you are available 24/7, 365. You no longer have to visit Merrill Lynch or Charles Schwab. You can sit at your kitchen table, go through the entire deal description from soup to nuts. Additionally, you can mitigate your risk. You're investing shoulder to shoulder with a dozen, 2 dozen, 3 dozen other individuals. Personalize your portfolio. So you can pick and choose the asset class, an assisted living facility, affordable housing, single family home, what have you, and you can personalize it to your own risk aversion. The information that you need to make an informed business decision is at your fingertips. Everything you need to understand all the moving parts, the biographies of the sponsors, the assumptions, the projections, the photos, etc., and all the documentation are there for your review. We make it as simple, seamless, and transparent as possible. Everything you need is upfront and easy to read. Costs. You no longer have to write $50,000, $75,000, $100,000 checks to get into these large private placement memorandums. Crowdsourcing, like our company, allows you to invest shoulder to shoulder with as little as $5,000. There's no upfront brokerage or processing fees as you pay with the big houses like Merrill Lynch, etc. Your $5,000 is your only investment. No ongoing asset management fees like you have in REITs and other types of investments. All expenses are borne by the sponsor. Our obligation to you, the investor, is that we curate the sponsors' deals in the markets. We underwrite each sponsor to make sure that they are indeed extraordinarily experienced. The deals are well underwritten. We understand all the moving parts, the projections, the assumptions, etc. And the markets are indeed vibrant markets for that particular asset class. This is key. We invest side by side with you. Every deal that shows up on our site, we here at RealtyeVest are a co-investor. And we remain involved from start to finish. We're there with you every step of the road. So we, like you, are actual investors watching our investment grow. Let me take a minute and turn the podium over to our friends at Spalding House, GD and Robert Bach. Thank you.
And the opportunity to present our project to your people. We are on the north side of Chicago. It's sort of upper middle income area. Our company is Senior Shared Living. My part to talk about this. Pat, you've been in this industry for 37 years. Can you tell us a little bit about your background, how you get started?
as a certified nursing assistant. Went on to become a therapy assistant, both occupational and physical. I'm the founder of In-Home Services. In 2003, that was started. In 2009, we then purchased a Medicare certified. By the end of 2016, both businesses combined with over 350 employees, both licensed, income of $107 million.
Wow, that's huge. I myself am GD chaplain, but out of college. After that, I ran a physical medicine pain management clinic for 15 years, which is somewhat related. Starting point for care is in something called activities of daily living, which basically is how does your problem, affect you do every day, eating, walking, standing, sitting, working, so forth. So the philosophy is very similar. How people, seek treatment. After that, in 2007, I got involved in the real estate. I became partners with Bob Bach. Bob and I have done projects in tax liens and also house flipping arena niche. And then as part of that, we started new students who wanted to become full-time real estate investors. And that's actually where this project was born. One of our students to get involved in real estate, and we started talking about his interest. And then at some point, sort of got into a side discussion, learning how to buy houses with no money down. And this was where Pat said, if I could buy as many houses as I wanted to buy, I would start it. So it's a little bit about my background and kind of where the original idea came from to start this business. Bob, you want to tell us a little bit about your background?
Come in through with an engineering background and also a project and project management background, product management background, industry of across over 5 continents, and had an involvement in and led a number of projects to over $1 billion in revenue, and was required an investment of about $20 million. So that helped to really grow the my telecommunications provider. What brought me into senior shared living is an experience that I had with my not as vibrant as it could be. And so when we started talking about this and how creating a nice home in a person's life in their later years, it was a passion of mine to make this a reality.
That's awesome. The address of the property is 4311 North Spalding in Chicago. It's a property about 4,000 square feet when it's finished. Pat, tell me a little bit about how you had this idea for a number of years type of residence.
Well, senior shared living in a residential home is very much like assisted living, your big box buildings, home-like setting. The ADLs are the same, the licensure is the same. The big difference is the home.
Bob, you've been a real estate investor. You're a numbers-oriented guy. Can you tell us a little bit about, as an investment, what attracted you to this type of?
Second most populous county with over 5.2 million people. When we contrast Cook County, which has roughly 9 senior shared, which has Orange County has about 3 million people, and it has over 1,000 senior shared living homes. That is a key in a slightly smaller population center. Well, Chicago is a larger population center than Orange County. And secondly, knowing that the median income is going to be adequate in order to support a facility like this for people's loved ones, $342 in the zip code where the Spalding project is. Those two things are the most significant points.
That's very interesting. Thanks for sharing. Pat, tell us a little bit about your background in the industry.
Well, I see the trends, with the baby boomers up and coming, there's going to be a massive amount of big box buildings, the assisted living communities. The trends that I see coming after working with seniors for the big box communities, they want to still remain in their home. What I would like to do in this venture for daughter Judy, so they get the best of both worlds. They're still in their home, but daughter Judy is secure, knowing.
You have in mind specifically, you said that.
Who did I have in mind?
Yeah.
The family member of the senior.
Okay, great. Itself, we're looking for a capital raise of $1.4 million. The term would be 2 years. It's a debt, and basically you would get 10% interest quarterly, paid quarterly over a 2-year period. And then once we get to a point this loan, you get 10% of the profit of that amount as well, above what the previous raise was as value. Basically, this property has a value of just a little bit less than $4 million when it's up and running and stabilized. So, of what we think the stabilized value in 2 years will be. Some more specifics on that. Purchase price of the property, do some modifications and soft costs getting the property started, roughly $470,000. Total cost basis would be around $1. At that point, be worth about $2.3 million in equity. The initial the $4 million and the 1.6, 10% of that number. Basically, 1.4 million, that'll be 140,000 divided by 4 quarters. That'd be 35,000 a quarter. Will be refinanced out at 70% of the 4 million, and that will be the rough 10%. That'll be the number you use for the calculation for the 10% profit appreciation. So if the property originally was worth 1.6 million, 6 million, and you refinance it at 2.8, the difference would be 1.2 million. You get 10% of that, which would be 120,000, and a 1,000 annual payment, which would be for 2 years. Our goal in this is to basically refinance our principal back to you investors. Hopefully that covered most of the major pieces. We did. Bob, could you explain the numbers a little bit to us?
So can you, the question had to do with, could you go back and explain
A little bit about the 1.4 and the 2.8 and the quarterly payments of 35,000 for 8 quarters, and then whatever additional extra that you would finance if you're basing it on the 4 million number roughly would be calculated on the cap rate, but that would work out to be 2.8 million. So then not only do you get a 10% on the initial for 1.4 million, but refinanced out and your original principal. So if the original principal is 140, and I'm sorry, 1.48 million, the difference, the additional 10% will be calculated on the difference between the 2.8 and the 1.4 million, which would be a net initial principal of 1.4 million. Does that make sense?
Yes. The second question has to do with either Pat or GD. Comment on the marketplace and that price point.
Hey, Pat, you did a pricing survey. You want to tell us a little bit about it?
Yes. I currently 9 senior homes, residential homes in the Chicagoland area. They run anywhere from a shared bedroom or a single bedroom, whether it's a shared bath or a private bath. And what they looked at this, what is out there, that's how we priced our model for the residents and give them a very high-end living at an average price.
I know you took some time doing it. I know you reached out to a number of your contacts in the industry, and I think it's important to have a sense of what, you know.
The GD question, why is this an opportunity now? We know that 40 million currently, and what does that look like as we go 20 years down the road?
Well, it's an excellent question. So the demographics, basically, the amount of people in this niche are, right now it's currently about 40 million. It's going to grow to over 80 million in the baby boom demographic, and say, well, you know, the baby boom started after World War II, and it certainly grew significantly during that time. But the actual original baby boom started in 1. But anyway, the point is that, you know, if you look at that number, you'd realize, well, if they were born in 1938 or in 2017, that would make them 79 years old. What's interesting about the baby boom generation, for 2011, more than 10,000 a day started retiring. That trend is going to continue until 2029. So that's 12 years. Also, as part of that 10,000 per day number, 4,000 of those people turned 85. The average person in one of these, and as I said, the start of the actual demographic trend was in 1938, which makes that person the first. So they're actually projecting that between 2018 and 2021, this niche is going to grow over 20%. There's 40 million total in the demographic. There'll be an additional 10 million by 2021. So that's actually going to grow significantly.
That's awesome. The other point we wanted to make is that pretty much what are the goals over the next 5 to 10 years?
That's a great question. We have 4 properties that we've targeted by the end of the second year. By the end of 5 years, we'd like to be at 25, and by 10 years, we'd like to be at 100 of these.
Pat, one of the business concerns has to do with, well, operationally on the larger level, but also is there enough service that we need to in the caregiver pools? Can you speak to your experience in that area and some of the things that you've done already to make it possible?
Between the ages of 18 and 25. I also am the founder of Matthews Home Health and Caregiver Center, which we train our and certify them by the state of Illinois, which the state of Illinois has also adapted my practices for this training, compassionate senior care.
That's incredible. A little bit of background too, Pat. Marketing will be key. We didn't cover marketing because of all the period of time that you ran, your home healthcare companies, agencies. You talk a little bit about what your plans are for the marketing?
Well, in hospitals, discharge planners, doctors, senior care advisors. Senior care advisors is a big key piece to the senior care advisors. What we do when we open a house, we will do an open house and invite all the senior care advisors in the area, the word out there, and put this house on the market to fill. Typically, I think any typical house get filled within the first 3 months.
Wow.
I'm that confident.
Well, and you've already been out laying the groundwork. There's several pieces of marketing that you've
20 contacts, have secured 3 meetings with senior care advisors. They're all anxiously awaiting our first open house. That was looking to move in August, but we weren't open yet. Mm-hmm.
Great, thank you very much. Appreciate your efforts in that area. Question, Bob?
Yeah, like if the funds are in place tomorrow, how long would it take before we could actually start putting people in the facilities?
Well, what we and then there's the operational side. The real estate side, it would take 4 months to get a license if we applied today. For these properties, well, 3 of the 4, I should say, have either been rehabbed or built in the last year. So typically with a rehab, property is ready to move in. These are already finished properties. So really we're talking about modification, which means we're adding sprinkler systems and that for safety. Those are the big pieces, and that is something that is much faster. We're talking about pieces for us in Illinois. We can actually put 2 people in this property before there's a license. So if, let's just say for the sake of example, that we're ready to be people to have people living in it, we can put 2 people in that finish, and so basically we would be open and running with residents in this in 4 months. Timeline as far as how many people do you think a month would you like to see us put in each property?
Well, I would like to in 120 days, which I'm pretty confident we can do that, at least 1 a week.
So like 3 or 4 a month.
Absolutely.
Okay. And what's, for example, in this property, like you need how many people in this to break even in the financial sense?
6.
That's great. So if you had 90 days before you break even,
right,
that's great. Right. And full capacity would be,
8 to 11, depending on weeks there.
Great. So, I mean, you think that, pretty easily within 6 months, this maybe 4 to 6 months, you would be operating 4 months. You think you'd be very close to a full capacity?
Yes. Because you got to understand, when we start the marketing, sometimes seniors start looking, families start looking, and not all the time is it a catastrophe to do it right away. They start looking, and it could be a couple months before they're ready to move in. So we can have them lined
before you can start getting them enrolled.
As a follow-up on the licensure point, as an investor, what relationship do you have with the Illinois Public Health and the track and the process that you go through to get and also the relationships you have in public health? I
am ready to submit for licensure. All the documents are currently and the soft stuff ready to go. That I know the Illinois Department of Public Health codes inside. 3 ladies that are at the Department of Public Health, Karen Devine, Karen Singer. I know them, you know, on a first name basis, and I can call them.
What has been your experience in your discussions with Illinois Public Health on their attitude towards seniors?
Oh, they love the concept. Like I said, there's not that many here in Illinois. I believe there's 9 on the outskirts of Illinois. Like the change, like to see it coming. So they are looking forward to it, and they're very helpful when I call them.
Is you might ask, well, so why haven't you already applied for a license? Because if you aren't ready in 4 months, you have to start the process over.
Right.
So you have the funding to do the rehab, because there's 2 steps. There's an application process, which involves more of a background check that usually takes on in real estate with our properties when we're getting them finished. There's you know, they just want to go through and review your, you know, operations manual, and, you know, basically that's the basis on which the license is issued. But again, the process resets if you're not ready. So because you would have, you know, timed out and you wouldn't have had the funding ready to go, so you couldn't have passed those inspections. So I just want to make the process, it's not something that we could have done any sooner that would have, you know, improved, let's say, or expedited the price. We've engaged a consultant from Arizona that has helped over 50 people start this type loan for a number of years. They have people on staff that have operated theirs. We've talked to people from Denver, from Albuquerque, from a number of people that are all engaging in this at the same time. And we feel like their experience process go a lot faster and have given us a lot more organization in order to be able to effectively and efficiently execute. Everybody, I appreciate your time. We want to thank you, Dan, and Anton, for all of your help and support in getting this webinar questions. You know, I think the next step is for people to reach out to Dan at RealtyeVest. And Dan, obviously you have some. I'm assuming that.